Hi everyone, thank you for dialing into our webinar today. My name is Regis. I'm one of the key account managers at Fleet Mortgages, and today we're going to be talking about underwriting. So in terms of agenda, I'm just going to quickly remind you all who Fleet Mortgages are. I'm sure most of you know, but it never hurts just to quickly run through it again, and a little bit of a flavour as to what it is we do. I'm then going to hand over to Zoe Jones, who's one of our senior underwriters. I met up with Zoe earlier today, and we'll listen to Zoe. She'll be talking about hints, tips, best practices when packaging those more complex buy-to-let cases, and just getting them in ship-shape order before the underwriter casts their eye over those cases. And then you'll find me again at the end of the video, and I'll just remind you all how to get hold of your BDMs, where you can get further support, who to ask questions to if you do have a case or you want to find out anything more about Fleet Mortgages. So moving on, who are Fleet Mortgages? Well, we are a specialist buy-to-let lender. We've been around since 2014. Our proposition is aimed at the semi-professional, professional landlord. We have a highly experienced team, so that ranges from the senior management team through to the guys in operations, through to the guys in sales. We've got an experienced bunch of people in each part of the business, and that does help us offer a great service and a very efficient service as well. We've got a broad range of mortgages, buy-to-let mortgages, three core ranges. We have a range that we call standard, which is aimed at your individual borrower, so a individual such as myself. We have a range of products aimed at limited companies and limited liability partnerships, so that's your corporate entities. And then we have a range that's specifically designed for HMOs and multi-unit blocks, so that's specific specialist property type. So between those three ranges, 9 times out of 10, we can find a home for your client and their particular set of circumstances. So that in a nutshell is who Fleet are. One other thing I wanted to talk about and give you a little bit of a flavour for is our flexible criteria. So in the past, you would have highly likely recommended Fleet Mortgages based upon our flexible criteria. We were going to be saying yes when other lenders were potentially going to be saying no. We may have been lending more, but there would have been a niche, a part of our flexible criteria that would have meant that was the main reason you were potentially coming to Fleet and recommending Fleet. Now, we'd be here all day if I was to run through all of our different flexible criteria points, so I've cherry picked 4 just to give you a little bit of a taste, and these are some of the more common criteria points that we come across as to why clients are coming to Fleet. So the first one, 4 applicants. We can have up to 4 applicants on an application, and we only underwrite applicant 1 for the income part of our criteria and the property ownership part of our criteria. So applicant 2, 3 and 4, from an income and property ownership point of view, we're not looking at those. We have no owner-occupier requirements, so although we won't lend to a first-time buyer, the client needs to have owned a property in the past for at least 12 months. They don't need to be an owner-occupier today when they apply. So no first-time buyers have to have owned a property for at least a year, but they don't need to be owning that property right now or living in that property right now. Our minimum income criteria is £15,000 for an experienced landlord and £25,000 for a first-time landlord. So again, compared to some of the other lenders out there, that's a little bit lower. And in terms of age of applicant, we can consider applicants from age 21, and we can actually look at applicants right up to age 95 when the term of the mortgage ends. So an 89-year-old, for instance, could apply for a 5-year term. So we can't go beyond the applicant's 95th birthday in terms of the term, but we can look at those older landlords who may be struggling to find a lender from the high street, for instance. So hopefully that just gives you a little bit of a feel for some of our more flexible criteria points, but believe me when I say there's a lot more, but we'll cover that another day. Moving on, the only other thing I really want to mention and make sure you was aware of about Fleet is our service levels. We're quite famous for them now. Very, very quick, very, very efficient. We generally operate at 24 hours on DIPs, applications and documents. So if you do have a case that's time sensitive and time is of the essence, then think Fleet, because we are very, very quick, very, very efficient, and our service levels, even throughout the whole pandemic, have been absolutely brilliant. Okay. And finally, We were recently acquired by Starling Bank. So as I said earlier, historically, you may have been looking to recommend fleet based on our criteria, our flexible criteria, or maybe it was down to service. You just needed that really, really fast turnaround. But this is the final bit of the jigsaw really for us, because the acquisition by Starling last year has meant that we can actually reduce our rates as well. So in the past, you may have perceived Fleet as a slightly more expensive buy-to-let lender that had all the flexible criteria. Now we've got that along with pricing. So you will see already Fleet climbing up the pricing league tables. We've had 2 rate drops since Starling Bank acquired us back in the summer, and the most recent one of which was after Christmas, and that is putting us in a very good spot. And hopefully more to come in the future, but watch this space. So on that note, it's time to hand over to Zoe. So we'll just cut to the video that I recorded earlier today, and Zoe will talk through her hints, tips and best practices when it comes to underwriting those complex buy-to-let cases. I'll see you over there. Hi Zoe, thanks for joining me today on our little webinar chat. I noticed that we've both got our headsets on.
Yeah.
Yeah, the plan today is obviously just to talk a little bit around hints, tips, best practices when packaging complex buy-to-let cases. And obviously, being one of the senior underwriters at Fleet, you are the expert. So I thought you'd be the absolute best person to talk to about this today. So yeah, over to yourself.
Excellent. Well, if we can go on to the first slide, I'll go through some of our requirements. First one here is with regards to income. So we accept various sources of income depending on whether you're employed or self-employed. So standard things like pay slips, SA 302s, accounts. Points to note, if you're a first-time landlord, you've got to be able to evidence £25,000 worth of income or more. This can be from multiple sources and can be from different business entities, etc., as long as we can see it. If you're an experienced landlord, we will accept £15,000 worth of income, and this can come from property. One of the quirks that we have with our income is if you're providing a tax calculation or tax computation and tax year overview, we do require an email or letter from the accountant confirming that those are the figures submitted to HMRC. Our income requirements are pretty much set in stone, but we do cover most mediums. If you do have something else that you want to evidence, please do give us a call and we can work through that to see whether it's something we'd be able to look at. Wes, if we can go on to the next slide. So this is our evidence of deposit. So we've got bank statements if you've got savings, completion statement if you've sold a property, copy of a mortgage offer, sale of shares, so a contract note or a letter from solicitor. From an underwriting and processing perspective, the most cumbersome thing we find with evidence of deposit is working out the source of funds. Anti-money laundering regulations require that we are confident the source of funds is a legitimate source. If you're submitting deposit requirements to us and they are bank statements, if you can give us either a summary or highlight those statements to indicate the payments we should be looking at. It's not effective enough to just provide us with a bank statement showing the required monetary amount in there. We actually need to see where this has come from. If you're providing us with a gifted deposit, we can only accept mum, dad, nan, granddad, brother, sister. It's immediate family members only. Again, we would need to see the source of their deposit funds that they're providing to you. Ideally, the money's in their bank account, the money's coming into your bank account, and a letter from them confirming that this is a non-refundable gift. Okay, if we can go on to the next one, this is a general list of submission requirements. So whilst this list is extensive, it's not all encompassing and you wouldn't necessarily need everything on this list. So for example, bank statements. When we're looking at bank statements, we do accept online statements, but please ensure they've got the client's name and account number and ideally an address in them. We need to be able to identify whose bank statements they are and what bank they're coming from. We don't accept any redacted documents. So if there's things you don't want us to see on your bank statements, we will go back to you and ask for them to be unredacted. There shouldn't be any information on there that we shouldn't see. And if we do have queries, we will call you with them. Right to reside. At the moment, a lot of people receiving share codes from the government. We're quite happy to accept this. This is a quick check onto the internet and we can pull your details up straight away. If your right to reside is quite aged and you had a residency permit or stamp in your passport and it's an aged passport that you don't utilise anymore, we will need ID, i.e. your current passport, and if you can provide your previous passport, full details page and confirmation of the residency stamp, that just helps us tie it all up and confirm you are still one and the same people. Asset and liability statements. If you have 4 or more properties, we class you as a portfolio landlord and we want to see your asset and liability statement. This is purely for any properties you own on a buy-to-let basis. We don't need your residential to be added to that. We do have a sheet on our system that you can fill in. It's a Word document. It's very easy to utilise. That said, if you have a large portfolio and it's on an Excel spreadsheet, again, we'll look at that. Or alternatively, if you've completed another lender's asset and liability statement, as long as it contains all of the information that we require, we will again take that. We're not precious about it being our own particular form. So that's another requirement we can add for that. Quirks with us, certain things that we have and haven't done before that won't be listed on here, but a submission requirement. So non-standard ASTs. These are normally what we class as commercial lets. So for example, we have a lot of ASTs from Serco. Now Serco deal predominantly with lettings for asylum seekers, refugees, that type of thing. What we would suggest is if you do have a non-standard AST, forward that over to our sales department pre-DIP submission. We can then get that passed over to our legal and compliance department for them to confirm they're happy with it. What we're looking for specifically on those documents is a break clause. The break clause entitles us, should we ever have to repossess the property, that we shouldn't have to wait any prolonged amount of time in order to gain possession and then look as a lender to resell the property on and get it off our books. Construction. So obviously construction methods are changing all the time with properties. We get so many modern methods of construction now. Our acceptable construction list is quite extensive, but there are always things that fall outside of that. If you have something that's a little bit quirky or a modern method of construction, talk to us in the first place. We can discuss this directly with our funder to see whether this is something that would be acceptable for you. A recent example of this is we had a client with a very high spec property in Cheshire. The property was Art Deco and had a traditional flat roof. Now, normally we would say felt and asphalt roof, but this roof was covered in fiberglass. Now, fiberglass is a modern method of flat roof construction. It's more expensive, but it's more durable and has a longer lifespan. Once the valuation report came back, we preempted this by going direct to our funders to say, look, this is not technically on our list of acceptable constructions. Would you look at this? The valuer confirmed that it was appropriate, and based on that, he would be able to provide an acceptable valuation report. And we were lucky enough to get that case moving, even though technically the flat roof construction was outside of our normal construction, acceptable constructions. Single skin properties. Now, you don't get many properties that are fully single skin. However, you do find a lot of properties, turn of the century properties, may have an element of single skin. These are normally your standard terrace properties that have a slight offshoot, which used to house, for example, coal sheds, outside toilets, those type of things. These have often been turned into bathrooms or utility rooms. That, in essence, is fine because we don't class it as a habitable room. However, if a large portion of what we class as a habitable room is single skin construction, the likelihood is we won't be able to proceed with it. So please do bear that in mind with turn of the century properties specifically. Limited companies, we accept limited companies and LLPs. The quirk we have, which some people don't realise, is anyone associated with the application will need to sign a personal guarantee for the limited company. This is applicable to all parties. It's not something we can get round. So it's just something to bear in mind when selling the deals as limited company deals, that the clients will have to personally also guarantee the loans. Ex-local authority properties. We accept ex-local authority properties. We'll always limit our lending to 70% on these. We will accept houses. We will accept flats. We'll even look at deck access flats. We're not overly concerned with the percentage of private ownership. All we're concerned about is it's a well-managed block in a good area. We also look at above commercials. We have done properties above takeaways before as well. The one thing to bear in mind above takeaways and above commercial is usually this is a parade of shops. So we're looking at one, how do you access the flat? If you're going down a dark, dingy alley at the back and it's through an industrial area, it's probably not going to gain a favourable valuation report. The same if your lounge window overlooks exhaust vents coming from the takeaway below you. These are not desirable properties. People probably wouldn't want to live there, and it can affect resaleability and your rental ability for the property because it will deter some people. We'll also entertain day one remortgages. So if you bought the property, for example, at auction yesterday, you bought it at a discounted rate, you're going to refurbish the property in order to bring it up to spec. We will do a day one remortgage for you, and we will entertain lending on the enhanced value. What we need to see, though, is what have you done in order to enhance the value? Simply purchasing the property at a discount and then trying to resell it on at a higher value is insufficient. We want to see what works you've done to the property. So if you have refurbished it, give us your top 5 invoices and before and after pictures. They tell us a lot about what has been done. Give us a list of works that you've done to the property to warrant the increase in value. In addition to day one remortgages and the increase in value, we do always want to understand how you purchased the property. So we are going to look at what monies you utilised for this. We will want to see a copy of the TR1 or the lease agreement if it's first registration. We're going to then look at the monies that you've utilised. So if you've used monies from your SPV, show us the bank statements. We want to see the transactions. Again, as with deposits, we need to understand the source of funds. Whilst we appreciate this is a spent transaction, has gone via conveyancers and normally a broker as well, we do want to make sure that this is meeting anti-money laundering requirements from our perspective. As with deposits, if the monies have come from multiple sources, if you can give us a point in the right direction as to where these monies have come from, that would be awesome. It just saves us coming back to you and asking 100 questions as to what we're looking at. I think that is me done.
Well, that's brilliant, Zoe. Thanks so much for running through all of that with us. I mean, from a technical point of view, you definitely got all the information rather than me tripping over half of it. So no, that's absolutely brilliant. Before I let you go and get back to that that inbox, which I'm sure is filling up as we're talking, I have got a couple of questions for you that I was thinking about before we got together today. So if you don't mind, can I fire a couple at you?
Yeah, please do.
Last year, we had a good year. I mean, we recently released our figures in terms of completions for 2021, and we saw, in essence, a doubling of business in 2021 from 400 million in completions to almost 800 million. In fact, I think it may have been slightly over that. So a doubling of business, huge growth within a 12-month period. I recently joined Fleet back in the summer, and so I'm curious as to how you guys on the operations side of the business actually managed to do that, because I know from feedback off the street from the brokers that Fleet service remains, it's pretty static at 24 hours on dips, apps and docs throughout that period, even though it was a huge period of growth. So really curious as to how you managed to maintain that, really.
Well, I suppose we're really fortunate. We've got quite an experienced team in the underwriting department. That said, we also had a lot of new starters last year. So as well as maintaining service levels, we also done a lot of training. We're quite robust with our training, ensuring that our new colleagues are up to speed and able to help manage with the workload. I think policies, procedures, we have very set procedures that we follow in underwriting to ensure that we're dealing with everything as quickly and efficiently as we can. We had a lot of help from our sales team last year. The sales took the majority of the incoming calls for us. Now, we always used to have an overflow into underwriting, and we would take not the majority of calls, but we would an average underwriter 20 calls a day, for example. That dwindled down to 2-3. It gave us a lot of time to head down and just concentrate on the workload. And with it being the sales team, they do have much more of an insight as to requirements and how to package the cases, and they were able to walk a lot of the brokers through things that normally underwriting would be trying to tread through. So I think that was one of the major things that helped us just keep on top of our workload.
Cheers for that. It's good to hear that the sales team were helping out there as well, helping to carry the load for everybody.
Exactly.
I'll mention that in my one-to-one with Steve shortly. My last question, really, it's a bit of a cheeky one, is if you had a magic wand and you could just spin it around your head and make every broker in the land do one thing differently. We'll call it a hiccup on the packaging, so a little hiccup that's the most common hiccup that you see, for instance. What would it be? What would be that one thing that you could just magically sort out overnight in terms of packaging cases to fleet?
Oh, I think I'd have to say there's probably more than just the one. But I think from my perspective, the very first one would be if you're submitting the application, if you can submit as many of the documents at the same time to us. One, it speeds up the process. Two, we're not being drip fed. We're not coming back to you. The brokers have then got to go back to the client. It prolongs the process. If we can get as many of the documentation, much of the documentation in first go, it speeds the process up for us. Our valuers panel are really swift at getting the valuations done. We can turn your cases round really quickly if we get all the documentation in. Two, as I mentioned before, deposits, purchase funds, tell us what we're looking at. If we've got to trawl through lots and lots of documentation, it's probably going to bring up more and more queries, and you can get yourself tied up in knots with those type of things. Did I say three? I think it was just the two, to be perfectly honest. Package them and tell us about the deposits. The rest of the stuff we can work through.
No, that's brilliant, and I only asked for one as well. So to get two, we got buy one get one free there anyway. So that's
did.
So yeah, that's absolutely fantastic. Thanks for agreeing to come and help me out today and talk us through all of that, Zoe. And
No
best of luck
problem.
with 2022, because I think we're going to grow a little bit more as well. So you might get slightly busier over the next few months, but you've already got a track record of smashing it anyway. So yeah, cheers for all your help, and I'll speak to you soon.
Okay, no problem. Thank you.
Thanks once again to Zoe, and thanks again to everybody that's dialed in today to listen to what we had to say. I hope you found it all very useful. The final thing for me to do is just to let you know how to get hold of us should you need any help, should you have a case you wish to discuss, or if you just want to find out more about the buy-to-let market and fleet mortgages in general. Very easy to do. All you need to do is either give us a call, drop us an email, or jump on the website. So the number's below, 01252 916 800. That takes you straight through to the sales team. sales@fleetmortgages.co.uk if you want to drop us a line via email, or jump on our website, fleetmortgages.co.uk. We do have a chat facility on the website, but you can also pop your postcode into the BDM Finder, the BDM Finder tool, and that will tell you exactly who your local BDMs are. It will tell you who your field BDM is and also who your telephone BDM is. So get in touch with those guys, arrange to have a catch up, get them in on your team meetings to present the fleet proposition, or book them in for a coffee one-to-one, and they'll tell you more about what we're all about. So thank you very much, and we hope to see you all soon. Goodbye.